AI is different. AI is something that's going to permeate every functional role and it's going to change the way that people work. So it's the jobs that need to be done. It's the way that people process and think about information. It's the way that we value the interactions between, customers and machines. The risk that you have when you don't take the time to understand how it's going to change your job is there might be someone sitting in another carrier that embraces the impact of AI on your job and says, I can figure out how to train my team to use these Gen AI models to reduce some of the tasks that they don't really want to do anyways, so they can
Yeah.
focus on the tasks that they should be doing, but they didn't have enough time to do. Hi, I'm David Gritz with InsurTech New York, and this is the future of insurance.
David, welcome back. One of my rare repeat guests. Good to have you on again. Um, you've got something big coming up with the spring conference that I want to get into and some of the topics that are going on there. But really quick, for those who don't know about you or InsurTech New York, can you tell us what that is and who are you?
Sure. Appreciate you having me on the show again, Brian. I'm the founder of InsurTech New York, and InsurTech New York is an ecosystem that acts as an international gateway to pull together startups in the insurtech space, traditional insurance carriers and brokers, and investors to really move the industry forward. So take some of the innovations that exist in silos within insurance carriers, within startups, and really increase the ubiquity of those solutions and technologies, and ultimately, improve the resiliency of the world.
I was going to say, tell us more about your background, but instead of that, what I would say is you and I collaborated on a book where you share your story, and it's one of the case studies, really, or like a pre-case study to it. So if people want to know more about you personally, they should get, or you professionally, maybe not personally, they should get The Future of Insurance Volume 3, where we hear your story and zero and your experience getting into insurance and insurtech. So we'll force people to do that if they want to learn more. But with the community that you built, one of the things you do is you have events, you have conferences, you have a lot of different events actually, but there's one that's coming up that sparked us sitting down, the spring conference. Tell us what is that and how how is it set up, but also what are the themes or the things that you think are salient right now that you're focusing on for the event?
Yeah, so every year we run an annual conference that pulls together our community in March. And this year it's March 20th and 21st in New York City at Pier 60. We're expecting almost 1,000 people there. And, one of the things that we do for the conference is, we study the year before. We usually have to come up with this, early in the year and think about what are the things that are affecting people's career trajectories, outside the impact of insurance on people's lives and how is that changing. And when we were sitting in 2023 in March, it was just starting to bubble up with OpenAI and Gen AI and some of the changes, and we realized, like, broadly speaking, the insurance industry is a little bit slower at implementing new technologies, whether it's compared to consumer or even manufacturing type of industries. So we said, we really want to look at that topic of AI and analytics and what the opportunities will be for insurers to take advantage of that to improve their underwriting, to make operations more efficient, or to reduce friction in the claims experience.
So I think everyone has heard the Gen AI and AI buzzwords to death at this point. I think the only thing we're hearing more right now as we head into the Super Bowl weekend is Taylor Swift. But it's not, it is a buzzword, but it's not just a buzz. It is a technical thing, but you've been thinking about sort of the implications and the application of it, thinking more on the functional side. Is that the sort of framing that you're taking for the conference this year? That it's not obviously it's not just buzz and it's not just technical, but it's sort of like what does it actually mean to us as an industry? Is that the thinking with it?
Yeah, so we always make our conferences about the practicalities. So the goal is, at the end of the conference, you'll have takeaways that you can bring back to your business. But a lot of people, had thought about different technologies, whether it's blockchain, it's IoT, or it's AI. And I would definitely say, things like blockchain and IoT can be very technical. It might be, people that are in data science or in IT that are implementing it. But AI is different. AI is something that's going to permeate every functional role, and it's going to change the way that people work. So it's the jobs that need to be done. It's the way that people process and think about information. And it's the way that we value the interactions between, customers and machines. So AI is that tie that pulls it all together. And I think a lot of times people are like, oh no, I'll just, send that to my IT department and they'll implement it. But the risk that you have when you do that and you don't take the time to understand how it's going to change your job is there might be someone sitting in another carrier that embraces the impact of, AI on your job and says, actually, I can figure out how to train my team to use these Gen AI models, like let's just say you're an underwriter, to reduce some of the tasks that they don't really want to do anyways, so they can
Yeah.
focus on the tasks that they should be doing, but they didn't have enough time to do.
Um, so you talked about like the practical, right? So is that what do you look for then in the conference? Is it going to be people who are actually putting this stuff into action? Because it feels today from the outside like, you said we're slower to adopt these things. The applications and the stories of true impact are few and far between. But have you been able to put together people to present on like, well, this is an actual thing we're doing, and this is how it's impacting us or our customers or our partners?
Yeah, definitely. So, I mean, just to give a preview of some of the topics that we cover at the conference, right? So, we open up with talking about will AI, actually stick in the insurance industry? So, this is more of a philosophical
Yeah.
discussion. And, some parts of the industry, it already is there. So, like, for example, on that panel, we have Zywave, one of the executives there speaking. And if you're an agency management system or they also own Advisen, you have a lot of large data sets, you have to be ahead of everyone else thinking about that. So that's kind of, paired with, traditional carriers and brokers sharing their experiences. And then,
Mm.
we roll into some of the easiest applications like talking to customers with AI. So, a lot of brokers are trying this out. And actually, we tried this out in terms of promoting our conference using an AI call bot to call people. And to be honest, it was really rough. I think it didn't produce exactly the outcomes that we wanted, but the potential is there,
Yeah.
right? So if you have a customer that wants to communicate with you on a basic update, right? Maybe they added a truck to their fleet. Maybe they need to get a COI out instead of having them call your call center and load it up with very simple, level one tasks, that could be handled by a chatbot that might be a easier, simpler experience that could also happen any time of the day, not just, 9 to 5 in your local geography.
Yeah. Well, and especially as carriers are building out more self-service tools, is thinking about something like that as a way to trigger it and to interact with it rather than forcing a customer down the specific customer experience that you've defined for them, which may work, may not work for them, may fit that person's individual preferences, may not. So giving people more optionality. And of course, as more experiences in our lives end up down these paths of having a more kind of human interaction with an AI, our expectations will be for that across the board. And so if insurance is not me, I mean, we've been through this story before, and COVID sort of forced us to wake up to a lot of these things where like the public expects something different and we're not meeting that.
Exactly. But beyond just the AI theme, analytics is also one of the themes of the conference. And, why we believe that analytics is so important in 2014 is because we live in a very volatile world. I mean, if you think about the things that have happened in the last 12 months, it's probably more things that have happened, across the risk spectrum than have happened in the last 12 years, right?
Yeah.
Who would have expected that we entered into, a major war in Europe and also the Middle East simultaneously,
Yeah.
and that, our shipping routes through some of, the biggest areas in the Middle East or the Red Sea are now being disrupted. And who would have thought that, inflation would have peaked and, still have been persistent in some of Europe, like especially the UK in such a short period of time. And then, who would have thought that we were going to have the amount of, labor versus capital challenges that we've had,
Yeah.
strikes in the auto industry, in Hollywood, with pilots. So
Yep.
those are all, major risk factors, right? So you think about it, war, pricing and labor, those are probably the largest categories that any insurer could have to deal with. And that doesn't even count like, what's been happening with climate change
I was
recently.
waiting for them, like the biggest of them all. Yeah.
Yeah, I mean, but I think people expected climate change. So
Yeah.
we've been talking about it for more than a decade, but people didn't think about labor, inflation, and war.
Yeah.
And in 2024, we need to deal with all of those. And the best way to deal with that is to really understand our data better. And that's where analytics comes into play, right? So, we're sitting on, petabytes of data. And unless we can extract it, it's not going to be very useful. So if you think about it, we talk about labor risk. How many carriers have, data back from the 1960s when there were major labor disputes? And wouldn't it
Yeah.
be great to look back to that and see how that can forecast, how long disputes are going to last, what's going to cause disputes to come up, and what the impacts might be on, how it's going to affect your book of business. So I think it's things that we really have to look historically to understand the context of where we're living today. So it's
Yeah.
really important that we use the tools available to us to access that historical data.
Yeah. Here, David, when you're painting this picture of these like major kind of macro factors that we're facing, the word that keeps coming up for me is confluence. So there's none of these things is happening in a vacuum, and I think that's been more of the historic, either the historic like experience that it was like this thing happened then, but everything else was sort of quiet, or it felt that way, or at least it's been these sort of discrete modeling events where the interplay of the confluence has never really come into play. And I think part of that is because we didn't have the tools or the power to deal with that. When you talk about analytics, you talk about AI, the models and our compute power and the tools at play to deal with all that are materially different today, even than they were like 2 years ago, to be able to do something with the interplay. I mean, you think about, you talked about shipping disruption from war, you talk about inflation, you talk about the strikes, huge supply chain issues, all those things happen at once. And then you throw in a weather event as well. If you're a business interruption carrier or you've got a huge exposure to that in the supply chain, it's not just the weather disrupted it or the shipping disrupted it. It's all of it. And it's like these dominoes that aren't just lined up, but they've got like strings between them. So they're not just falling, they're like pulling other dominoes with them. That's incredibly complex. And that takes a totally different level of tool to really sort through and model and predict. Uh,
Yeah, no, I
yeah,
completely agree, Brian. I mean, I feel like when you listen on Bloomberg and people are talking about with the shipping disruptions, how is that going to affect oil prices? And, the logical corollary is to look into the 70s and say, the last time the Red Sea was cut off, oil prices, 100% increased. But what actually happened over the last couple months is, they've actually gone down. And the only way that you could have modeled that is if you looked at, what's happening in the Chinese property market, with their kind of, we'll call it credit problems happening, the German property market where it's down over 2 quarters, 12%. And, on the other side, right, there's been robust supply in the United States. Like we are in a different world where the
yeah,
United States is more or less the largest producer of oil and natural gas. So when you say, okay, well, we're going to have a supply disruption, you also have to look at, how significant is that supply on a global stage?
yeah, yeah. Everything's different. at PLRB's Large Loss Conference, we had a keynote speaker who's one of the number twos at NOAA, at the National Weather Service. And one of the things he talked about is, and I reached out to him to get the exact numbers, and I don't have them yet, but he was like, we have these massive data centers that do the weather modeling, and they're, super powerful, highly predictive, good accuracy. Today with AI, you can run a model on your laptop that, those big models take tremendous amounts of compute power to take several days to come up with, like, where's a hurricane going to go? You can run in a couple of hours an AI-based model that's running all these simulations and predictions on your laptop, and it will come up with generally the same level of accuracy as the like giant model. So it's that sort of thing. It's like, look, the tools are completely different. The modalities to do this are completely different. And if you think about, okay, that's the same inputs leading to one output, just more efficiently and differently. Now you've got all these different inputs from the things we're talking about, the interplay of all these things. Um, I like, if I was an actuary, which I'm not, I think I'd be very excited about this, is like the possibility for actually kind of modeling the world instead of just a discrete event as it ties to a discrete coverage, because things don't work that way.
Yeah, we had a startup in our accelerator called Salient Predictions in the last cohort, and they use the AI modeling approach as opposed to
Yeah.
the massive data approach. And their whole focus was focusing on weather events that happen 2 weeks out to 1 year out. So not climate and not your, weekly weather predictions. And they're, significantly more accurate than the traditional weather modeling
Oh,
because they just take into account different data sets.
yeah. And they're arriving at answers through a totally different paradigm.
Exactly.
So you said something that I want to move on to talking about, yes, your accelerators, but also InsurTech New York is this amazing community and sort of, I think, global hub for activity in the industry. But you've been building over the past, I don't know, year and a half or so, an InsurTech fund called the InsurTech Fund. You're moving on to Fund Two. You've made investments. I'm really curious about what your thoughts are. What are the things you're looking to support, and what are you seeing out there?
Yeah, so Brian, we started our first fund in 2022, and we now have 12 companies in the portfolio. So we've really had a chance, a full couple year cycle to not just see the trends, but actually, work with our portfolio companies and help them to grow. So, there's three key themes that I think are really important to us. It doesn't mean, if you're a founder and you're not in those three key themes, we're not going to talk to you, but they're things that are driving our thinking of where we see the opportunity is. So, first is the growth of excess and specialty lines and,
Hmm.
MGAs to go after that. So, I mean, anyone who's familiar with target markets knows that, they're one of the core conferences that supports MGAs. But if you look at the data, over the last decade, excess and specialty lines has significantly increased faster than admitted. It's more than like doubled in size and premium in the last like 5 or 6 years. So the opportunities there, if you're a startup, is like you can identify a niche that is either underserved or dislocated and create a really nice business that a traditional carrier may not benefit from because it's either a little too small for them or they just don't have the tools to get at it. So, for
Yeah.
example, we have a portfolio company called Certus. Their focus is on multifamily real estate. And one of the biggest problems with multifamily real estate is, the operators have had, 20, 30, 40% rate increases year over year over year.
Yeah.
So it's starting to actually hit the bottom line where insurance is one of the largest line items of cost against the buildings, and it's eating into their maintenance budgets, which is not what an insurer wants. Insurer wants them to be proactive and do maintenance. So
That's
Certus
the point.
has integration partner with Leonardo 24/7, which is one of the, the top tier property management and maintenance softwares. They have checklists on everything that you should do from, inspecting the pools to finding spots in the sidewalk that could be trip and fall risks. So they're able to identify the property managers and building owners in multifamily, they're the top performing ones because they care about preventative maintenance, and they're able to reward them with, giving them access to this tool to perform better, and more consistent and less volatile rates. So that's an area that there are a lot of carriers that are in the space, but there's also a lot that have dropped out of the space.
Yeah.
And, it's a growing market and a growing opportunity.
Um, you've triggered a lot of trauma moments for me, having been a GL and professional liability writer for property managers. That you're absolutely right. And as soon as you mentioned pools, that's when I got very uncomfortable because yeah, there's um, but in every one of those moments, there's a trace back to like, why weren't they doing this? If they had done this, and that unfortunately makes it a really clear-cut case of liability. If they had just done this thing, this person wouldn't have drowned, wouldn't have fallen the way that, like you can't stop everything, but it's so clear the impact it has. And I never really pieced that together as if your premium is driving up, there's only one pot of money ultimately that doesn't leave the money then to put into making the risk as safe and well kept as it needs to be. So you get in this weird balance point. It's a really interesting approach to it. I hadn't thought about that.
Yeah. So second theme that we care about is reducing the friction in insurers' transactions. And this is broadly speaking, right? So I'll give you an example of one of our portfolio companies that does this, but it's, across policy servicing, across claims, across underwriting, across distribution. So we have a portfolio company called Bird's Eye View. And essentially, what they do we were talking a lot about weather, right? So, underwriters that deal with contingent weather liability, so think sports games, festivals, any outdoor event, um, what they're able to do is combine all the things they need to do for underwriting in one screen and get it done really quickly. So, imagine, you have a music festival in London that you're underwriting. They have a weather analytics platform that essentially tells the underwriter, on May 12th, there's, a 20% chance of a thunderstorm. Then they have this workflow engine that incorporates, your rating table and like the data questions you're collecting. So you receive one submission and you can basically review everything. And then it auto generates, the prices based off of your rating table. So you can take something that you would have to go back and forth between one of these larger core systems and then your rating table and then your other like question data sources. It might take you, 5, 6 hours, maybe a day to, less than an hour. So that adds a lot of value because it means more quotes, more business won, and maybe some of that incremental business that's, under 50K in premium that you weren't going to spend a lot of time on, you can now get that done. So that is pure friction reduction. Um, but those same things are happening in claims, in
Yeah.
policy servicing and in distribution.
There's for all of our efforts on the efficiency side, there's tons of friction. And there will always be. There will always be new sources of it. So I definitely I love seeing solutions like that. And for people who've sat in that underwriting chair or any of the others where it's like all the different tools you're trying to make sense of, all the steps in the process, what if you could bring them together? What if it could be more seamless? I think hopefully there's people cheering for more solutions like that. What about the third
Yeah, so the
focus?
third theme is about increasing the availability of coverage, especially to the middle market,
Yeah.
and the creation of, new products that's going to make, the world more resilient. The most recent investment we made was in a company called Elios, Eleos. They're based in the UK, and they created a disability product that could be essentially automated underwriting, and it's offered in embedded experiences, whether it's a digital lender, a neobank, any fintech that believes that they have a relationship strong enough with a customer to introduce them to disability. The crazy thing is in the UK, less than 5% of UK citizens have disability cover. They call it income guarantee there. In the US, it's 14%. It used to be twice as much, a
Yeah.
couple decades ago. So it's one of those products that like makes a lot of sense, right? Like a lot of people, if they're not able to work because they're sick, they should be protecting their family with some type of disability cover. In
Yeah.
the US, it's very common that it's offered through, your employer. In the UK, it's not as much offered that way, and like there's not really, other than Elios, many solutions for individuals, whether they're freelancers, small businesses that don't have those programs. So Elias has really come along to increase the availability of what, is a pretty logical product for
Yeah.
people to have.
I know this, the point of you raising this wasn't for us to then talk about the disability industry, but I'm fascinated by the 14 and 5%. Is that inclusive of the group offering? So people are getting it from their employer, or is that purely just like the individual or private side of it?
So it's collective, right? So like all markets, right?
Wow.
So if there's,
Yeah.
300 million people in the US, only 14% of
Yeah.
them have disability.
I I just assumed that that was like net of everyone who's getting it through work. So to take that into account, it's like that's, I mean, I would wager a huge proportion of that 14% comes through the group side through their employer. So it's like
Yeah,
the
I
people who
mean,
are
we
choosing it. Yeah.
We did some research. We talked to a few carriers about that. I mean, on a pure volume percentage, it's definitely more coming from the work, but actually in like total premium collected, it's like pretty close neck and
Sure.
neck.
Yeah. The premium per life is different outside of the group space. I had no idea the penetration was that low. That's really interesting. Now I get why there's ads for, I'm not going to name the one with the duck who has lots of ads out there, but like I get the point of the ads because there's tons of growth potential. There's lots of
Yeah, it's such a
room.
problem in the UK
Yeah,
that there is actually a
100%.
government initiative to get people to raise awareness. A lot of people don't even know that disability as a product
Yeah,
exists. So essentially the UK government wants to increase it. So talk about, tailwind to support the business.
yeah. It is ironic. I literally was just talking with my wife about this yesterday because I got something from my disability insurer. And so she was very confused about what it was and how it worked. And then I was confused about why she was so interested in it, but that's a whole other conversation. Um, David, before we go, I do want to go back to the conference briefly that I was able to make it last year. And is it the same venue?
Yeah, it's going to
Yeah,
be
for
at Pier
60.
60. Yeah.
I hope the weather's the same because that was like the most gorgeous conference. Like to go step outside on the water there, it was awesome. Um, you had a number of panels that I think really impressed people. I mean, they were all great, but there were a few that it's like, wow, look who's on that stage, and to get to listen to them. You were telling me about one in particular that I can't make it this year, and I was already kicking myself, and now I'm kicking myself with both legs. The founders panel or the CEOs panel, I don't know which one it is, but you've got three. If you're able to share, there's three people who will be on that stage that it floored me when I heard who they were to get them together and to hear their perspectives on things. So can you talk about that?
Yeah, so the panel is our keynote on the second day. It's titled InsurTech CEO Perspective, Paving the Path to Profitability. So, we have three very impressive CEOs in their own right, but all together. So, we have Jack, CEO and founder of Cowbell Cyber. We have Alex, founder of Root. And then we have Rick, who is the current CEO of Hippo, and he founded their distribution product as well, that he had sold into Hippo.
That's a big deal. I would love to hear the three of them. The one that struck me, and maybe people are like, why is that exciting, was your regulators. You had these commissioners together, which just awesome perspective at an InsurTech conference in particular, hearing their view on things. I was blown away by that. Maybe normal people aren't as interested in regulation, but it's such a critical thing that can either help or stop the path in this industry. So I appreciated hearing their view. This one's going to be pretty amazing. So that's happening March 20th and 21st, Pier 60 in Chelsea. Do people just go to insurtechnewyork.com or NY?
Yeah,
InsurTech.
insurtechny.com. They'll be on the homepage. You can go to the conference page and register.
And if they're coming to the PLRB spring conference, they can stay through that and then hop on the Acela right down to New York. and make it to your conference and make the whole week about growth and development.
Perfect
Well,
combination.
yeah, yeah. Thank you so much, David, for coming back on. And yeah, you've like, I'm still stuck in the disability penetration like that. I think that's gonna define my day now, thinking about that one. But it's this AI question analytics. It's more than just buzz, and it's not just a technical thing. It's not for your IT team. It's for the whole company. So, hopefully people are taking that in and thinking about what you said. So thank you for joining us.
Thanks for having me, Bryan.
Thank you to David for coming back on the show. David's one of my favorite people. I got to meet him just before lockdowns hit way back in 2020, and have just grown so much from getting to be connected to him and be a part of a lot of the things that he's done. So it's always great to sit down with David and hear about the stuff that he's doing, along with his co-founder, Tony Liu, over at InsurTech New York, both in the community and in the fund. They're really at the center of so much of the interesting things that get to push our industry forward. So if you're not a part of that community, definitely go to insurtechny.com, sign up for their newsletter, check out the conference March 20th, 21st at Chelsea Piers in New York City. It's a great venue. It's a really cool spot. And I hope that David's thoughts really gave you something to think about as you wonder, where do we need to invest in this industry? Where should we be spending our efforts or focusing our attention to help drive us forward and solve some of the fundamental issues that need solving in the insurance industry as a whole, for ourselves, but also for the communities, the businesses, the individuals that depend on the coverage we provide for them to live their lives, do business, and go after what they care about. So with that, I will leave you, and I will see you back here next time. Thanks, everyone. Bye-bye.